especially cement, that's going to be the sector which is going to be in focus today. That huge consolidation. I know you track the sector closely, Sajid. How are you looking at it?
From a sector point of view, it's a good news because it will help in pricing power coming back to some of the larger players, because pricing is one of the issues which was there, flagging the entire cement sector. We saw slight improvement in pricing towards the mid of the year, and then again prices have cooled off there. So this consolidation will help in bringing in pricing power. From a ratio point of view, ACC Ambuja ratio seems to be fair, and at the current market price, ACC was anyways trading at a discount, and Ambuja, being the holding company for ACC, was not able to get the full value of ACC there. So the consolidation of ACC into Ambuja and Orient into Ambuja, and basically brings in some kind of value unlocking or value creation for the existing shareholders, because that brings down the holding company discount which was there in Ambuja. So that value unlocking will happen from an Ambuja's point of view there. But from a synergy point of view, you have to look at 100 rupees per ton is what they have indicated as the synergy which is coming in. But more than that, there is a lot of inorganic growth that has happened within Adani Cements. All acquisitions coming in with a lot of logistics and mining, everything coming into place. This consolidation will help seamlessly move material from one unit to another unit, because now it's becoming one consolidated entity in that sense. Industry-wise, Adani has already indicated 155 million tons by 28. But their biggest competition will continue to be Ultratech, which is aiming at 200 million tons by FY27. So there is going to be two big cement companies in India, the Adani Cement and the Ultratech, and between them they will have a good control on many of the regions there, and thereby some pricing power that was much awaited by the investors coming into this sector as well.
In fact, let's pick up on that conversation forward, and who better than Rakesh Arora to throw some light on that. Rakesh, hi, morning. Good to have you on the show. Rakesh, while some of the synergies were already at play because of the master supply agreement, but tell me, what kind of operational synergistic margin accretion do you see because of this amalgamation between ACC and Ambuja?
So, see, this is, first of all, it's been 25 years of courtship before this marriage. So it's been a long journey. I think Ambuja bought a stake in ACC in 2001 or something like that. So it's been 25 years in making. Number two is that this is equal to buying around 22 million ton of capacity at around $81 per ton. Now, a company like Ambuja trades at $140 to $150, even in a beer market like this. So, there's an immediate value add of around $1.1 to $1.2 billion, so which is around equal to 10% of current market price of Ambuja. So that's the value add which investors in Ambuja would see. Number three is that synergy benefits are largely done, meaning they have indicated around 100 rupee, and I don't really see too much of change in the market dynamics for the cement industry. Meaning, as you can guess, that since they already had the majority control, even CCI approval is not required. So even, CCI doesn't believe that it's going to change pricing dynamics.
Rakesh, strictly from a valuation standpoint, hi, good morning, this is Harsh here. Strictly from a valuation standpoint, how does this appear? So currently, no change or no value accretion to the shareholders of ACC. Shareholders of Orient get 9% more, but from an EBITDA perspective, what changes? Because the EBITDA per ton is different for an Ambuja versus an ACC versus a combined Ambuja entity. So how should one look at the valuation in terms of the combined entity, and is it value accretive in that sense going forward for ACC shareholders?
So, see, ACC shareholders were stuck in a range for last, I think, 5 years now. The stock hasn't done anything at all. In comparison, Ambuja stock is up some 70-80% during that period. So if you check from the period when, Adani checked, I won't really read too much into the swap ratio and all that. Now, coming to EBITDA per ton difference, meaning obviously there was a minor difference earlier. Already the company is, taking steps. So the difference between Ambuja and the ACC EBITDA per ton isn't likely to be huge, and would narrow down further as these, synergy benefits kick in.
Rakesh, hi, morning. Sajid here. Does it also, bring to a conclusion of the entire inorganic approach that Adani Group was taking with respect to the cement sector, and now it will be more of an organic in addition of capacities going forward to reach 155 million tons?
See, with Adani's around, I don't think I'll take that conclusion. Meaning they can swing deals further. So already there is Jayaprakash Associates, which they've recently acquired. So that will get merged. That's another 7-8 million ton capacity. Sanghi's merger is still due, so that will also happen. And then there are still some targets which are available at the right price. Adani's might move in. So I won't say that the consolidation phase or inorganic growth is over. Obviously, it will slow down because there are not too many large targets available.
Okay, Rakesh, great to have you on the show with all that insight. And of course, Ambuja, that's one stock that we're going to be looking out for in trade. Do expect some positive momentum there.